So finally, I am delighted to welcome the Walmart team. So thank you for joining us today. They have self-selected to sit over here as far away as possible. And then our guest speaker for the day, Jon Alferness. I'll let Jon introduce himself in more detail. But Jon and I go way back. I wouldn't say we're colleagues, we're friends. Would you agree with that?
Yeah, we can say friends.
We can say friends. I think the last time I saw you was in Vegas.
Oh yeah. Right. So it's friends tend to show up in Vegas more than colleagues, but we might have been there on work.
I was there. I think you might have been there. I was there. My family was randomly ran into each other at a restaurant.
Yeah, that's right.
We saw it. And I think that's the last time I saw you. That was a long time ago. Jon and I worked together on the mobile ads business at Google before he went off to do bigger and better things. Now is the EVP and Chief Product Officer at Walmart Digital in the U.S. So the way we're going to run this is for whatever 45-ish, give or take, minutes. A conversation will be recorded. You can see it right there. And then we're going to shut that down, and then we're going to move to a career conversation with Jon, and we'll invite some of his colleagues up to talk about what it means to be a PM, what's a career path for PM. So we'll kind of have like two topics today. The first one being centered on how do you make decisions and prioritize product management. Although it's a tad bit intimidating to be recorded in this way, although we're recorded every day, we're used to it, Jon has asked, and I would ask for even this part of the session to be very interactive. So if you have questions about Jon, if he says something that you disagree with, please chime in and make this an interactive session as well. Does that go for me as well?
Yeah, of course.
I disagree. I'll just get ready for it.
Perfect.
So I'm going to stop talking, and without further ado, Jonathan Alferness.
I don't know. Thanks for having me. I've been doing product management, I guess, for probably the better part of 20 or 25 years. And what I'll say to all of you is I think, it's awesome that more and more there are classes, there are programs that help, help frame what product management is, how you can bring this to life in the business world, how to think about applying yourself. If you go back to when I was in college and then some of my recent jobs coming out of college, I think I graduated, graduated grad school in like 97, 98. There was product management, even as a concept, was very, very new. It was project management. Microsoft had a little bit of a building program management type of function, but nobody really knew what product management was, which was a good thing for me because it enabled me to become one. I went to school as a computer scientist, and I quickly learned that while I love science, math, computer science, and all of that, there were better engineers out there. Just folks who could code faster, better, harder, whatever you want to say. But I had a keen ability to talk to people and understand what happened to make software work. So I acted as a little bit of a translation layer, bringing people together, which I think is really the heart of what product management is all about. So it is just an absolute pleasure to be able to get to share a little bit of today with all of you. Like we said, we brought some friends along. This is part of an offsite that we're doing. From a leadership team perspective, we have work to do even at Walmart, just to be completely transparent. Walmart is a 60-year-old retailer. We are the Fortune 1. It comes with, a lot of responsibilities and also this sort of terrifying notion that, okay, you're in this amazing spot, but how do you stay here? How do we constantly think about our future, reinvent ourselves? And we are working our tails off to figure out how we bring product management to life at a company like Walmart. It's not that product management is brand new to us, but how it's going to help shape the nature of our business strategy, how we work, how teams work, how we can unlock the value that's sitting in front of us. It's something that's still very nascent. Product management has worked, but a little bit more in silos in the past. And so a lot of what we're talking about in this offsite is how we can up-level the role of product management. So, I think it's just real serendipity that we got to be able to come together. So you'll hear from some of the friends later. We'll make sure to make the Q&A very, very open. But also through this talk, I don't have anything brilliant to say. These are just some of the things that I've learned along the way of trying to do this and make it work for companies, business, and people in the past. So stop me, ask questions, say, look, that doesn't make any sense. What do you mean there? or I've seen it differently. What do you think about this, that, and the other thing? And I'm happy to oblige. Today we're going to talk about prioritization. Title of the talk is How to Prioritize When There is So Much Opportunity. And you'll see this throughout your life, not just in product management, but absolutely in product management. Every idea is a good idea. Every idea has the potential to deliver billions of dollars, if not hundreds of millions of new users to your product, your company, your platform. So we have to do it. But you're going to always, always, always run into constraints. If the world was one without constraints, the lives of product management, how we think about prioritization would be pretty damn easy. You just do it all. And in a lot of cases, you will enter companies, you will be put in situations where companies, teams, and people are used to just doing it all because they've grown, especially during times of growth, right? We're in a little bit of a downturn if you look at the macroeconomic situation. So startups, companies like that, et cetera, have shifted from this very, very high growth period where venture capital is practically free. You need more engineers to get it done, no problem, hire more, you can keep growing. Then all of a sudden, when the constraints kick in, and it's like, okay, we can't hire anymore, but we still want to be able to get the most bang for our buck, leverage our engineers the best that we can, this is when it gets really hard. And so what I'm going to talk through is a little bit of the experience that I've seen with prioritization in product management, some of the things that work, some of the things that don't work. And to make matters kind of short, I'll tell you that there are no tricks. It's not like, oh, just use this framework, there's this book or this website. This is really something that I was telling Chris earlier, I jokingly say, is like, you can't really write it down. It's something that comes with practice and with doing it with people.
Which is why this class works, in my opinion.
I think the format, to Chris's point, I think the format of doing this as a lab is awesome. I'd love to come back and take the intro class. I think I'll maybe take you up on that.
I don't know that you could pass it.
Do I have to study? Are there tests? Okay, well then I could probably pass it. It's just like a have to show up kind of thing. But the labs that you all are doing, do I have this right? You all are set up with various companies, establishments, whatever, and you are doing a lab of sorts where you have to put together an MRD, a PRD. Do you have to go up in front of somebody to get it sort of nodded off on, signed off on? Do you have to give a prezo on it in front of Chris?
The company.
And the company. See that? Sorry, Chris. That matters. Like you have to actually do it for the company.
Yeah.
And then what do you get in terms of feedback? How do you know that what you've done is valuable?
Not yet. They haven't done it yet. So.
Or how do you know that what you will do will be valuable? What's that feedback loop? Is it just a grade? Is it just feedback from you, or do you get feedback from the companies as well?
So I will get feedback from the companies, and I will funnel that back to them. And then there's a question about whether the company's used to work or not, sort of up to them. But usually then everyone disperses to the wind, and they go on with their fabulous lives and whatnot, and they forget about it. But
well, what I'll say is...
By the way, what I've structured it as, so you're aware, I ask it to be like an ACM meeting. I ask the companies to treat it like an ACM. So bring your engineer. You remember that, right?
Oh, I do.
Bring an engineer, bring your lead PM, bring someone who represents sales as much as you can, and then essentially tear the proposal to pieces. That's where you are.
This is a spirit of, it's not the way it works in all companies. But it was certainly true at Google, and it's a spirit that Chris throws out, so it's worth spending a couple of moments on. Google is one of the few places that I've ever had the opportunity to work where what Chris said is both terrifying but also true. Whenever you put a proposal on the screen, or even just the silly pictures of my family and me on the screen, people in the back would be going, okay, well, that's not right. He says he's in Bali there, but that actually looks like the Amalfi Coast. So you come to something like ACM and you put up a proposal, hey, I'm going to get 100 million more users by doing X, Y, Z. Before you even know it, there's people in the audience ready to raise their hand calling BS. You could not get by with any amount of inaccuracies, flubbing, et cetera. So these kinds of things were really, really high stress, but at the same time, they were really how you knew that you were doing good work, because when people nodded in agreement, you really built that alignment. In fact, earlier today, sorry, I'm already way off track. Earlier today, we did a team offsite, and we talked a little bit through, this book's a little bit older, but it's called The 5 Dysfunctions of a Team. it's worth looking at, skimming through, reading, even just at a surface level. But the basic, it has a bunch of tenets of what it means to be able to work well together as a team. And one of those tenets is that we have to be able to argue with each other, really deeply disagree when we don't agree with what somebody's saying. Or look at something and go, look, I just don't believe that math is right. Let me sit down and show you why I don't think that's going to work. We're going to talk in just a minute about alignment on strategy. I think that's one of the most critical areas to think about when you think about prioritization. And the only way to know that you're really aligned on something like strategy is to really fight about it. Well, what if this doesn't happen? And what if that assumption isn't true? Then what happens? How do we think about it there? And this is the setup for something like ACM, where, I mean, a little bit, teams would tremble as they came in. There were moments of screaming and probably tears, if Chris will help me recall. But it was also this thing that you would repeatedly go through. So if you went through and you did a bad job, you'd take the team back together after the ACM and you'd sort of soothe them and say, it's okay, this happens, it's no big deal. And the team's like, okay, whew, at least we don't have to do that again. And you're like, what are you talking about? We're going back again next week. And you do it again and again and again until you built that alignment, or basically you killed the project dead. And then you knew, okay, well, it wasn't a good idea, we'll work on something else. It drove really, really incredible alignment. Okay, please keep interrupting. So I'm Jon Alferness. I'm Chief Product Officer of Walmart U.S. I have a family. I have 2 kids. We love traveling. We love Disneyland. And we love Legos. Look at that clever use of a single photo to cover both. We have a farm up in northern Napa. We grow grapes. We raise chickens. We have bunnies. Those are some of the heirloom tomatoes that we just harvested. So trying the best I can to live a little bit of a balanced life while obviously keeping very busy at the job. And then our day-to-day is spent in San Francisco where my kids go to school. Talk a little bit about my career, so especially so that we can dovetail it with some of the conversation that we want to have in a little bit. Like I said, I went to school for computer science. I wanted to do computer graphics when I grew up. I wanted to work for Pixar, something like that. So I went to Cornell, and then I went to Caltech for my PhD. About a year into my PhD at Caltech, I kind of thought, damn, I'm going to have to spend 6 to 7 years here, and I didn't love LA. And it was the late 90s, and so startups were exploding up in the Bay Area, the first real wave of startups. And believe it or not, there were some really cool computer graphics startups that were happening in San Francisco. So I dropped out of Caltech, and I moved up to San Francisco, where I worked for a variety of smaller companies, until in 2004, I found my way to Google. The interesting thing is I was never really a product manager in that path to getting to Google. I'd done a bunch of different functions that, kind of felt like product management, but I never had the title. So I applied to all of these jobs around product management at Google. I got rejected from dozens upon dozens of job applications from Google. If anybody remembers Craigslist, my wife pointed me at a Craigslist listing in about 2003, 2004, and she said, John, this kind of sounds like what you do, and it's at Google. You should take a look and you should apply to the job. The job was a technical account manager in the partner services organization at Google. Effectively, what it meant was that I was a human who kind of understood the technology, but could also speak to people about how things work, the technology implementations around Google's syndicated products. Think web search, but web search embedded in somebody else's site. Think ads, but instead of ads showing up on Google, think AdSense for search, which allows those search ads to show up on other properties. So I got this opportunity to come to Google as a technical account manager. I was super excited about it, very quickly disillusioned as I got in because, okay, this is a job that I can do, but it's not that exciting. Because of the relationships that I was able to build early on at Google, I found my way over to product management. Again, I was very fortunate, I was very lucky. If I had come into Google circa today, there's no way I would have been easily able to navigate myself into product management with just a couple of recommendations. I would have gone back to my career and been like, we got enough people knocking at our door. Anyway, at Google, I led search ads quality, the back ends, big chunk of search ads for the better part of 3 to 4 years. Search ads is a fascinating business. It is still the thing that drives by far the most revenue to Google. I don't know where it is. It's probably north of $100 billion a year by now, if not more. Then I led the mobile ads teams. That's where Chris and I worked together. I did that for about 3 to 4 years. Led mobile advertising on the web, as well as on apps. We really kind of pushed into AdMob, app install, that entire business, and I have a few stories I'll share about that in a second. And then the last 3 to 4 years of my time at Google, perhaps the most fun time I had there was leading the shopping and travel teams. And shopping and travel under the product management umbrella, we intertwine the monetization pieces, like how we actually make money from selling you a ticket to, plane ticket to go where you want, or selling ads for our shopping properties, but also the consumer side of things. When I come to Google and I want to search about, the best baby stroller for cobblestone streets, how do we think about integrating real-world knowledge with the product catalog and get that back to the user? 13 years of Google seemed like a long time. I think a lot of our friends and colleagues are there for even longer now, but 13 years of Google seemed like a long time. So I left and I joined Pinterest. I was there briefly. You can ask me some questions about it later if you want. Then I went to Lyft. I led the ride-sharing organization at Lyft for about 3 years, engineering, product, the science teams, the business teams as well. We're really, really proud of some of the work that we got done at Lyft. A very, very different business than the ads business because of the way it combines the physical and the online presence, and it's just very tight market with the duopoly. And then after Lyft, I went and I joined. It was sort of this progression of how payments and financial services and everything works underneath. Okay, you've done ads, now I've done transactions. So I went to go work for Varo, which is a fintech, the only fintech in America, a startup, that was actually its own bank as well. So we had a banking license, which created a whole fabric of difficult strategic questions to ask. While I was at Varo, building that integrated tech organization, I got a knock on the door to come join Walmart and be their chief product officer. While I was having fun at Varo, it seemed like too big and exciting of an opportunity to pass up. In fact, it reminded me of when I was at Google. The one thing I kept thinking about when I was running the shopping team is, man, the marriage made in heaven here would be if somehow you could get Google and Walmart closer together because of the unlock we have from the digital online user side of the world with Google and some of their technology, and what Walmart can do fundamentally with its 4,600 plus stores and its ability to get products and packages to you as a customer. Still something I think about today. So that's a little bit about me and my background and how I'm here talking to you guys today and already running slow. So thanks for your patience. Why you need to prioritize, why it's difficult, alignment on strategy, creating a common currency, investment in platforms. Just a few topics that hopefully we will give you some thoughts on today. And again, please slow me down, ask questions. You're gonna be like, why you need to prioritize, why is it difficult? This is obvious. Prioritization, as I said a few minutes ago, is really tough. I don't know, I'll talk about it from the Walmart perspective for a second. Myself, my team of leaders as well, we run into this issue constantly, daily, quarterly, yearly. There is an enormous set of features, of things the business wants to get done that all make sense, that you can put a great business proposal behind, you can convince yourself it's the right thing to do, but in the end, you're working in a constrained economy. There's only so many resources that you have to put against it. So you've got to figure this out somehow. How are we going to prioritize what we're going to do? And then ultimately, how do you do the really difficult thing of drawing a line? Saying, great, everything above the line is good, we'll do it. Everything below the line dies until we can think about it again, which will be either in a quarter or in a year. Let's see, I wanted to give some examples here. A few examples from my career in terms of just when prioritization was difficult and yet it seemed like it would be, more obvious, easier, and a little bit of how the outcomes kind of fell out. So when I was leading mobile ads at Google, I don't know if Chris will remember this, we were still focused on solving mobile advertising and monetization for the mobile web. And it was during this dark period of Facebook's time when they had gone IPO, everything looked like it was going to go great, and then all of a sudden their stock started to tank, and it kept tanking. And there was this deep concern about Facebook and how they were going to turn that around. And if this is probably further back than most folks will know, but Facebook at the time was made all of its money off of desktop ads, and mobile was clearly not just the future, but where everybody was leaning in. So there's this growing need around mobile. We had AdMob. AdMob was a mobile ads platform that Google acquired. When I picked up the mobile ads product team at Google, I think we had AdMob for about a year. AdMob's unique strength was that it was investing in an area of app advertising and app install ads. These are all very common now, but back at the time I was speaking Greek to my sales teams, to friends like Chris. I don't know if Chris remembers this.
At the time, before the time, even probably years before, Eric Schmidt, the CEO of Google, next to sort of co-running the company with Larry and Sergey, the co-founders, had realized the need to pivot the entire company to mobile.
Yes.
Mobile first.
Mobile first,
Mobile
man.
first
all
was
the way.
everywhere. But that was pre-app. That was still,
It
it was still pre-app. So the message was delivered. You existed, right? You had a team. You were mobile first, mobile web first.
Trying.
Right? Trying to be mobile app first. But how important, in your view?
That was the debate. Is this where you're going? Go ahead.
I was just curious how important it was. It's more of a tone at the top. How important was it for Google that Eric led so vociferously mobile first? Because he didn't have to. And my view is he was driving that charge.
We needed somebody, I would say, we needed somebody to get us out of our comfort zone. Our revenues, our experience, the products worked so well on desktop. And because every day you went into work and you sat behind a desktop computer or maybe a laptop, you go, yeah, this mobile thing, I mean, kind of. But like the business on desktop is huge. This was even why I didn't want to move to mobile ads. Susan Wojcicki asked me something like a half a dozen times to take ownership of this team. And each time I went, yeah, that's nice. Do you know how many tens of billions of dollars I'm driving with search ads on desktop? I'm good. And by the end, I was like, damn, I don't think this is an option or a question. I think I need to go take the mobile ads gig. It was very prescient. She was ahead of where the world was going. And now, I mean, you all know, I mean, even I'm the same way, right? Most of my life is done off of a mobile device rather than a desktop or a laptop. What I think was really interesting, as much as the company needed the push and Eric's push into mobile was spot on, I think what was missing was that next layer down. So again, we'll talk about it more in a second, but when you think about strategy, it wasn't enough to say mobile first. Because what Facebook said was, that's fine. You can have the mobile web. Who wants the mobile web? If we can win on this app thing, maybe then we're ahead. And that's where these app install ads really took off, because what you could do in terms of value and attribution there was very different than what we were seeing on the web. In fact, you could tell that there was this misalignment. So thanks for the reminder. When I came into this role, I was thinking about this and I thought, well, but I don't know. They say we're mobile first, but do we care about the web or do we care about apps? You're going to see this throughout your career. You're going to see it throughout prioritization. It depended on who I asked. Let's see, who did I go talk to? I went and I talked to two people. Linus, who was the fellow who ran Chrome at Google, very invested on the web side of the world, obviously. And Linus told me, Jon, it's simple. We don't care about apps. We care about the web. Mobile web. It's going to be where all of the innovation is going to take place. Google has firmly planted its footing in the web space. We own it. It's free. It's open. It's the future. The users are already choosing to use it. Like, that's where we have to go. Linus was an incredibly powerful person at Google even back then. I said, okay, that's a good one. That's a good point of view. And then the other fellow I went to go chat with was a fellow by the name of Andy Rubin, who came in through the Android acquisition, was also, we've got a lot more stories we can tell about Andy, but probably not right now. I said to Andy, what do you think, mobile or apps? Because Jon, it's not even a question. Apps. You can already see users are voting for it. They're buying these devices which are driven by apps. They're installing apps at an incredibly fast rate. So I took that disagreement back to my leadership team and I said, I don't think we have strategic alignment here. I think we have to kind of figure out which one's more important. Should have pushed on it harder. But at the time, I was relatively junior, and I was like, okay, I guess we don't have to have you're like, I guess we can't figure out the alignment, we're gonna have to muddle our way through. But had we actually worked harder to kind of disambiguate the two and think about what was more important than the others, I think we might have avoided some of those missteps. Other questions here, please jump in. Yeah, go ahead.
At Walmart, when you were interviewing for this role, did anyone throughout the process say, these are the big, hairy problems that we want you to solve, that would have had all of these inputs? Then when you start, and this could be applicable to the entire Walmart team, potentially, when you start, you're like, oh no, it seems like this is actually misprioritized based on you being in the function.
Yeah, I'm curious, other friends' inputs as well. What I would say is the problems are well understood, like the array of things that you have on the left-hand side. There were a lot of what people talked to me about. Yeah, my God, we have tech debt. We're not necessarily focused on the customer nearly enough. We're getting all of these random exec asks and just like, go do this, go do that, et cetera. I think so then you take the job and you embrace yourself in the situation as it stands, where it's hard to just snap your fingers and fix it, is fixing any one of these things requires alignment, collaboration, trade-offs between my peers, the other execs at Walmart, those people who own the engineering resources, for example. If you have strategies that don't line up in terms of goals, outcomes, et cetera, this is where you really feel the rub, right? As far as I could tell when I came in, the organizations that had been at Walmart the longest often had the most engineers earmarked or aligned to their organization. And the newer emerging businesses and emerging organizations, right, had to be able to motivate why engineers were important in their area, right? So they've done a good job of now kind of balancing that out, but it's always a matter of trade-offs, of taking away from one to give to the other, right? So again, if you don't come back to an aligned strategy where everybody is then rowing together towards a common goal or outcome, you can often end up in friction. It's a good question. We've got more questions. Did anybody else want to add anything? Did I put enough feet in my mouth there that I'm good? Okay, good. We'll keep taking some questions and I'll get back to the talk. Go ahead, Rosa.
Question also about differences with working for Walmart right now and your years in Google. So Google is a product-led organization, so business is digital product, and question about strategy, it's about surviving of the core business. But in Walmart, like physical stores are core business, and maybe some of your stakeholders treat like digital products more as a channel and not like the core product. Do you like see this difference, and is it more difficult to prioritize?
Yeah, I think it's one of the reasons I'm at Walmart. I think the challenge is big, but the opportunity as we unlock it is greater than even where it was, when I was at Google, because folks already kind of had aligned on some of these ways of working. I think we talked about folks understanding mobile and the change that was happening in the marketplace around mobile, and that at some point you had to lean into the fact that everybody was just going to pick up their phone and do what they wanted. So if you didn't have a good mobile app, mobile business, et cetera, you were going to get left behind. Walmart understands this, and we are in a good path of a transition towards this direction. But it's the same thing in retail, right? Our stores and the physical footprint to us are incredibly valuable. And we are where we are in part because of that footprint, right? We can reach 90% of the American population within 10 miles, which is incredible. But the other 10% of the American population, we can't. And the closest store, a colleague of mine likes to say this from the Walmart perspective, but the closest store to you in terms of buying just about anything that you need, where is that store? Yeah, it's in your back pocket, it's in your phone, it's in your whatever device you use to think about how you connect to the internet. So if Walmart doesn't put its best effort forward to bring to life digital experiences that can get you that same instantaneous value, then we're left behind. And really then you'll see, and we'll talk about it a little bit in a second, but strategically, the question for Walmart is how can we leverage the store footprint as good as humanly possible, because it's something that a lot of the competition doesn't have, while we also do an amazing job on the store side of the world, right? So we're moving execs into that world where they understand it, and that is also bringing forward a lot of the tougher prioritization problems that we are still trying to solve. We haven't fully solved yet. That's what it's sort of what makes the experience a lot of fun too. Let's keep going on some questions, and I'll get back to this. Go ahead, Anil.
Yeah. So, how do you prioritize a disruptive idea which probably doesn't fit into your annual business objectives or doesn't contribute in a meaningful way to your AOP? Like something that, like, maybe an example could be maybe Microsoft thinking about getting into hardware.
Right. Look, we'll talk. Any prioritization that you need, that you want to do, has to have some amount of motivation. So it has to be aligned to the strategy or some general thinking about why it's right for the company to do it. You can't just do it because it's disruptive. But if what you're saying by disruptive is it's really hard to put a pin on what the output of that product or project will look like, and it's really hard to know what the cost is going to be, what the ROI is going to be in that set of trade-offs, then one thing that you can do is you can think about allotting a certain amount of your resources or your time or however you want to do it to disruptive ideas, to experimental ideas. So Google had a philosophy called 70-20-10. It seems easy, but when you go to sort of institute this in practice, it can often be a huge mess. But it worked at Google. 70% of our time, resources, energy, money should be spent towards the core business, thing that gives us oxygen. It should be spent towards web search, ads monetization, all of that stuff. 20% we should spend on things that are a little bit out there, but we can see how those things might turn into a large-scale business product, et cetera, somewhere down the line. 10%, teleportation, flying cars, reincarnation, whatever, like completely crazy stuff. So if you have a little bit of a framework like that, it allows you to modulate in these ideas around the fidelity of the outcome that you're going to get, which allows you to better play with those ideas. Let me shift back to get through a few more topics in the talk, and then we'll get everybody else's questions as well. We talked a lot about alignment on strategy. No amount of tools, planning process, products that you want to use, et cetera, is going to solve. Everybody thinks a tool or a framework is going to solve prioritization. Can I pick on Ashley? Where she went? Maybe it wasn't you, but there was somebody who, when it was around OKRs, I think. OKRs in general, I think, are a pretty decent framework, but OKRs only work if there's an overarching strategy that works and everybody's bought into that those OKRs can plug into. So I remember having conversations early on in my work journey with Aisling where the question was, what's the OKR tool that we should use? I'm like, it's easy. It's either Excel or Google Spreadsheets. It's like, no, but there's like tools. We can use tools. Like, it doesn't matter. What matters is that we've aligned at the strategic level. We understand how our inputs, how our outputs, and what we're doing feed into that strategy. So ultimately, the tools are just a mechanism, a way to get there. And they're not going to solve the problems for you. Let's see. One other thing that I wanted to talk about in the world of strategy is, so when you're thinking about strategies and doing prioritization, how do you break things into, let's talk about two things. How do you break things into chunks, aggregate units that you can operate on? Right? We talked about that. I was talking about this from an OKR perspective. At Google, a chunk would be something like search ads, would be something like organic search quality, would be something like the docs experience. And then you could kind of set up goals and outcomes against that you could bubble up higher and higher so that you could start to align what the resources were that you needed to achieve to get to those outcomes. If you're constantly just working with a low-level list of projects that you want done, et cetera, getting some sort of alignment there or getting to prioritization won't work, right? It really helps to have a strategic framework that you're working after. Let's give a couple of examples of what I mean by alignment on strategy. So at Lyft, and the exact details of alignment matter. At Lyft, our leadership had set a North Star of 50% year-on-year rides growth. In fact, I came in as the VP of growth, and I sat down with leadership, our CFO included, and I said, okay, tell me what our strategy is, tell me what the goals are so I can go work with the teams to make sure everybody's lined up and we're all marching in the same direction. So, John, there's no work to be done here. I've already done all of this. I told the teams it's 50% year-on-year rides growth and everybody's good with that. Can you see why maybe that doesn't work? So what does 50% year-on-year rides growth mean to you? Well, maybe if I'm running the business around airports, it means growing airport rides by 50%. Maybe if I care about drivers, what I'm thinking about is growing rides that are profitable to drivers by 50%. Maybe if I'm just there to kind of juice the growth, I'm going to grow short rides. Maybe I care more about value and I'm going to grow long rides. What I saw when I went to go talk to the team about this, we thought we were aligned on strategy. Everybody was going in a different direction. And the outcomes weren't pulled together at all. Okay, let's keep going. Oh yeah, go ahead.
Question. So you mentioned that using OKRs as a framework is a good strategy only when people are aligned on the definition of the metrics or the overall strategy.
Yeah.
Is there an alternate framework other than OKRs when you are aligned on the strategy and the definition? Because I just like from working in tech for a while, I've never seen anyone not use OKRs. So I'm just curious to see what that.
What you'll see, I think, is, so the question is, are there alternate strategies other than OKRs, if you do have people aligned on, say, strategy, metrics, outcomes?
Maybe just pause to make sure everybody knows what an OKR is.
Oh, raise your hand. Do you know what OKRs are? OKRs stand for Objectives and Key Results. We never got this fancy at Google, but it was things like, in the ads business, it was, I owned an OKR, for example, of growing ads monetization by 5% every quarter, which meant for a constant volume of queries, I would monetize those queries 5% better by the end of the quarter, so that by the end of the year, you were up 20%. So regardless of query growth, we should stay a growth company because we're doing what we need on the ads monetization side of the world. So that's an example of a OKR, one OKR. And you can imagine sub-OKRs underneath that of how I'm going to achieve that plus 5%. Then you can imagine so it's a hierarchy, you can imagine an OKR above that that says, okay, if you're going to get 5% out of desktop search ads, what are the other kind of monetizations you're going to get out of other products? Okay, plus X% overall for, say, the ads business, with then maybe guardrails, governors as well. And I'll do this without losing any users or without losing any queries, et cetera. All of these things would form your OKR framework. The nice thing about OKRs, as Trina is asking, is when I set this up right, I can hand you an OKR and I can say, I don't care exactly how you get it done. You've got a set of resources. Please go get me that output. And I know that that OKR plus what Ani is doing plus what Trina is doing are going to ladder up in the way that we need for the strategy for the business outcome. This is something that's really hard to put together if you don't have a strategy that makes sense and that ties into the business, the goals, the metrics, the outcomes that you want. When you do have the strategy, the business, the goals, and the outcomes that you want, I think you will back yourself into OKRs. You will back yourself into, these are the goals that we need. These are the objectives that I have for myself. These are the tactics to achieving those objectives. How can I take those tactics and hand them to teams to try to get them done? I've seen it done with a lot of different names, phrases, words, et cetera, in the past. But I can always take a spin and go, okay, well, they're effectively just OKRs. And this is where I think when I look at it, I go, it's not about the tool. It's about how do you think about decomposing the business problem, the user problem, into these series of metrics, goals, and then effectively pieces of work that I can hand out to teams or sub-teams. Did that resonate or no?
Well, that makes sense, but I think fundamentally what you're trying to say is that OKRs work, but only if you have a agreed upon definition for what that metric actually is. Because I think at the end of the day, you do need to tie everything back to revenue or growth,
right.
And that's a number, and that is an OKR. So.
Yeah, and I think it's also what I'm trying to say, I know I'm all over the place, but it's what I'm trying to say on the prioritization front, right? the only way that you can prioritize is if everybody is clear on goals, metrics, outcomes. The only way you can prioritize is if you're clear on the strategy. Otherwise, you're going to run into trouble of, is this more important or is that more important? And we're going to talk about common currency in a second, which is another way to think about something that effectively ladders up into this as well. Okay? I've got some more hands. Go ahead.
This might be something you're getting into, but when you have that product strategy and you have multiple product teams sitting within an organization, so ads, whatever the different divisions are, and they have their own OKRs, how do you deal, or have you had incidences with like cannibalization of like having this team has these OKRs, but it is eating into this?
Yeah, of course. So the notion of cannibalization is, I don't know, it's all over the place. I think it's really important to take a look at. Normally, the way that, for example, we've dealt with this at companies that I've worked with in the past is we measure it, and then we put guardrails against it. So you have to be thoughtful, both as somebody creating your product or your business line, that your product may cannibalize other people's products. You need to kind of raise your hand and say, I'm sorry, search ads may be taking away organic clicks on the organic search side of the world, so I'm going to try to do my best to measure that. And then now we've kind of moved up the organization, but you should sit down and have the conversation of how important is ads to Google's business? Turns out it's pretty damn important. Okay, are you willing to lose search queries to drive ads monetization? Chris, what's the answer? At least when we were there.
No.
His answer is right. The answer made at the very top of Google is no. We are not willing to lose even one search query to make the tens at the time of billions of dollars of revenue in search ads that we are making today. That was true at least for search ads. And we proved it time and time again. It's one of the more unique businesses that I ever touched. Search ads actually drove users to come back to Google. It didn't reduce ad query volume at all. And when you looked at products like the shopping vertical, shopping ads, product listing ads, increased the number of queries that we got. When you took product listing ads away, we saw a decline in engagement on the consumer side of the world. We saw fewer queries. So these were the very top level discussions, and they're easier to do at the beginning of a business. When you invent a new business line, please do it then. Think about how you would put principles into place, and you'll know a principle because it will be everlasting. Principles are not based on data. The data should follow from the principle, maybe, but principles are something like, at Google, as a principle, we will never lose search queries because of ads monetization. Great, those are your guardrails. Go make as much damn money as you can from ads without losing any queries. And the team did a fine job of it. Go ahead.
To that point around like data orientation and when you should be looking to data versus like more of a philosophical approach, how do you balance like coming up with those principles and ideas when you don't have a lot of data versus like, especially as an e-com business where I'm sure there's a lot of optimization testing opportunity, like how do you balance not just like A/B testing yourself to death versus like where do you come up with these ideas of like your thoughts on the market and like where it should be and where it should go?
Yeah, the question is around experimenting, A/B testing, when is enough, how do you not overdo it? There's various techniques. I'll say at the highest level, this does come with experience. What you start to see is diminishing returns when teams are constantly attacking the same problem with A/B testing, right? And at some point, your amount of gains that you get in that space suggest you might need to take a larger step in a different direction and stop looking for the incremental gains. That would be one example. Another example is some A/B tests don't need to be run. Again, when you understand your business and your products well enough, there are products that are there are changes and tweaks that are just the right thing to do. Okay, so you can measure it if you want, but it's not an A/B test because you're not going to not do it. So just do it and measure it and then record what the value of, for posterity or for moving forward, et cetera. I think the other thing that I want to say is, so if I think again, and I know I'm using Google a lot here, but it's safer territory for me because it's older. If I go back to my time running search ads at Google, I would effectively put together a portfolio. I knew I had to deliver plus 5% RPM every quarter. So I had a set of tweaks, improvements, tuning algorithm changes, et cetera, that I knew were a fairly certain bet for maybe 2-3% that quarter, and I kind of could see where that was going great. Then I had an array of things that were much bigger bets. Who knew if they were gonna work? Maybe they were gonna fail completely, maybe they were gonna net plus 4% RPM, which was huge at the time, right? And I would effectively set that up so we would do maybe 3, maybe 4 of those big bets while we ran, say, 20, 30 of those smaller experiments. And together, especially after you run the business for a while, you get a sense for what's gonna work here and what isn't. So it comes back a little bit to portfolio. I wanna touch briefly on common currency. So this is one of the bigger challenges with prioritization. We kind of got into this a little bit with OKRs. If you understand how you ladder up into OKRs, et cetera, this can kind of work for you. But one of the simpler things to think about here is, hi, I need 10 more engineers to go accomplish XYZ. Okay, great. What are you gonna get out of it? Oh, I don't know. I think it would be a good thing to do. Well, okay, why? Well, I think it's gonna deliver $10 million more for the company every year. Okay, great. What do the engineers cost you? Well, about $5 million. Okay, so then you're getting $10 million out, you're getting $5 million of engineering resources in. What are the other projects on the list, and what are we getting from an ROI perspective there? So if you can get people to use a little bit of a common currency, it can be very, very simple. You can just look at it as total number of resources against the output you're gonna get. You can get fancier, right? When I was at Faro, when I was at Lyft, and we got out of these massive growth phases into more conservative times, we pivoted to look much more at profit, at contribution margin. We tied the work that we were doing back to the contribution margin that it would deliver back to the company, and then we looked at the contribution margin per number of engineers that we had against it. And that became a common currency for how we prioritized and ultimately stack ranked our work. It worked pretty well, but you'll find that with, you'll find that you have to do a lot of translating and explaining to folks, right? What is contribution margin? How do I look at it? Is it long-term revenue? Is it short-term revenue? Are we looking at this as a proxy to really where we want to go, or is this the final output, final outcome? A lot of retail and e-commerce companies, you can look at things like GMV, you can look at revenue, you can look at contribution margin. We look at all of this at Walmart. You can also look at shorter term metrics, like conversion rates, add to cart rates on an e-commerce website as a proxy to moving you in that direction. But understanding in these cases that it's not the full picture. Then if we go all the way back to Google, some of the common currencies that we used were this notion of RPM, revenue per 1,000 queries. So that's that plus 5% RPM every quarter I talked about. And then the organic search teams looked at this as well. They looked at it through things like total number of queries, which I mentioned earlier. They looked at it through a long click rate because I just didn't want to spam people and get spammy clicks, but I wanted to get longer term clicks. Making sure that everybody is lined up on what this common currency is, giving yourself a way to measure it and come back to it time and time again and believe in that measurement is really, really critical in order to be able to do prioritization well. Let's see. How are we on time, friends?
We are way over. So what time do we end at?
3:15, so like
Okay.
3:50.
like 30.
So let me wrap this and then we'll get to broader questions because I know you're itching to ask them. Think about how you lean into platforms. So platforms are ways of thinking horizontally. I think we have another slide that'll maybe illustrate it better. In a very large company, you'll have things that look like the left until you've evolved to get to the right. You've got a number of product teams that all want to reach the end user, the customer, and they've got a bunch of messages, information, narratives that they want to be able to ship to the customer. And so the notion for running fast, how do we get there quickly? Oh, it's okay. I'll just build a little bit of a messaging system, fabric, whatever, and I'll get the messages I need to the customer. Okay, good. Well, you have another team over here doing the same exact thing, and then you have team C doing the same. Before you know it, from a customer standpoint, you're getting messages now from each of those three teams separately. At the same time, you've just invested in building the same thing 3 times. Instead, when you think about what you can do from a platform perspective, how you can approach this from more of a horizontal perspective, what if you had one team that was just in charge of building a communications platform that took the messages that each of these product teams wanted to send to the customer and made sure they got to the customer in an efficient way? What if that communications platform also made sure that we did things like frequency capping, so we didn't overly spam you with notifications? What if we did our measurement there, et cetera? All of a sudden, not just these 3 product teams can take advantage of this one platform, but all of the teams in your organization can take care of it. So what you don't want to do is overly build platforms. You don't want to build platforms before you have the need of 3, 4, 5 teams who need this. If you do that, you get to Google problems. What you also don't want to do is wait to the last minute to build platforms, because then you've expended a whole lot of resources, you've confused end users, et cetera. Facebook tends to skew this way so that they can run very, very quickly and let all of the teams kind of do their own thing. And then later, they've got to kind of slow down and actually build this platform and integrate this in. This is one of the things that we are chatting about at Walmart right now. Because again, we have gotten to really, really large scale. We have some platforms in place. But if we can unlock the power of doing more with less resources via things like platforms, we'll be able to scale much, much better than we already can. All right, let's alignment on strategy, common currency, investment in platforms. I've taken you through a laundry list of things in Jon's head, so it's a good example of what prioritization doesn't look like, but also want to open this up to more questions, because that's where this has been, I think, the most interactive and invigorating. And then, I don't know, we'll make sure that I don't know how you want to do this. Go ahead, ask the questions.
Thank you, Jon, for being here.
No, you're good.
So I have a question about point number 2, creating a common currency.
Yeah.
You talked a lot about business metrics.
Yeah.
I'm wondering, where do customer benefit
Yeah.
into the whole picture?
So it's a good point. So is this just apply to business metrics? No. So customer metrics are the same thing. So if you think about this from, we need to grow revenue, great, but how are you going to grow revenue? Well, first we need to grow users. Okay, how much do you need to grow users by? What kind of users do you want to grow by? These are perfect metrics to kind of put in place as well. I want to drive engagement. I want to drive re-engagement. I want to drive acquisition of new customers. But I think tying that back to the strategy and ultimately the business outcomes needs to happen as well. So why are you going to try to drive those user metrics? You tie that back in ways that make sense. That should be a perfectly fine metric to optimize for.
Hey, Jon, so I've got like a perspective on this. So it is fairly common, and I even see it in the projects that get offered up for this class, but just in life. It's fairly common for executives to talk about things like grow 5% quarter over quarter, some sort of growth metric. But to your point, the only way to achieve that, it's sort of on you and the product management team to figure out, like, okay, well, what's the user problem we're going to solve that actually allows us to grow 5%? Like, they sort of delegate it to you to, like, figure it out. How often do executive teams start with, hey, let's solve this user problem versus solve this company problem? I mean, the answer could be 0% of the time. I'm just curious.
Well, look, from my perspective, especially if you kind of think Silicon Valley startup culture, I think it starts with the idea of the customer problem we're going to solve. Hey, it's too hard to get around. Wouldn't it be great if I can just have Chris drive me around with a push of a button on a phone? Wouldn't that be great? And then it goes from there to, okay, I want to get as many users to adopt this thing as possible. And then it goes to, how am I going to make money off of this, right? So it's not usually, in startup land, it's not usually money first. It's usually idea first, then growth, then money. But I think in order to build strategies responsibly and thoughtfully, you're going to build a business unless you're doing a nonprofit or something like that. So you have to think about the outputs in the end. You have to think about the business goals, the financial goals, et cetera. Then you have to think about the human beings using your product and how they're going to drive those business goals. But what you're getting to is that the origin of it all is the value proposition that you're presenting to the user. Is it unique? Is it valuable? Are people going to come back to it and use it time and time again? And if you don't have a compelling value proposition, You can inject growth into your business. You can buy users and get them to use your product, et cetera, which is what some of what we saw during the heyday in the last few years. But it doesn't sustain. You don't build a long-term sustainable business. As soon as you pull out that growth mechanism, your business kind of stalls.
Right.
So if you go back to Google, making the world's, organizing the world's information and making it universally accessible and useful, right? That was the core value proposition that we were gonna solve for users. Then it sort of magically led to bringing on as many users as possible on its own. And then it's a long story, but then we stumbled upon AdWords to make money. Larry and Sergey were gonna sell search in the beginning and thought that was gonna get them to scale, but it probably wouldn't have. Go ahead, Caitlin.
Can you speak a bit about growing your product ecosystem through acquisitions? I think like Jet.com is the obvious example for me for Walmart, but I'm sure there's others.
Mhm.
Sort of what the integration process looks like and how day-to-day considerations would be different for those product teams.
Yeah, so sort of growing portfolio outcomes through acquisition. Examples are things like Jet. Examples are also, in my career, things like YouTube, Android on the Google side of the world.
AdMob, you mentioned it before.
AdMob, exactly. Growing through acquisition works. It's hard to bring companies in and to intertwine them in a way that really works. You'll see a lot of acquisitions kind of stay segmented, separated, siloed. A bunch of acquisitions don't work as well as they should. I think you tend to see the most value come from acquisitions. I would say two things. One is you want to think about an acquisition in spaces that aren't sort of a core competency for you today, right? So it's a good way to be able to augment, say, a business. The other is you want to do an acquisition in a way that you're going to continue to shepherd it through that integration. It can't just be thought of as like we will acquire and bring on a company and then it'll just figure itself out. You have to actively think about how you're going to bring these folks together.